Hi, welcome back. Testing 7800 at this point in time. So 7815 is currently where the Nifty is at. There are a couple of pharmaceutical stocks which are managing to buck the trend. So Suven Life Sciences, which has received 2 patents from the US included. So that stock is holding up quite firmly. And we have some amount of gains coming into Strides Arcolab. So that stock is up around 2.7%. But let's shift focus towards the banking space and what are the expectations this time round. We are joined by Nilesh Parikh, the Associate Director, Wholesale Capital Markets at Edelweiss Financial Services, to talk about his expectations from the banks as well as the NBFCs. Nilesh, hi, good to see you in today. First, I'm going to ask you about IndusInd Bank. What is your expectation on IndusInd today, and do you expect, and how do you expect the private banks to stack up this time round?
Yeah, good morning. So starting with IndusInd Bank, we're expecting a PAT growth of about 27% during the quarter, in line with what we've seen with them over the last couple of quarters. I think operationally the bank is expected to deliver strong loan growth, given that we've started to see momentum coming back on the retail asset side, and with limited pain on asset quality, I think this should translate into better earnings performance for IndusInd Bank. Having said that, for the private sector banks, I think between the private sector banks and the state-owned banks, I think the divergent performance is expected to continue during the quarter once again. Largely, looking at the credit growth, I think we've seen muted credit growth for the industry, and that's going to be a reflection of what we're going to see at the state-owned bank level. On the other side, when you look at some of the private sector banks, they've invested heavily in the last couple of years in building up their network, and that I think should be a key driver for them to start picking up growth this quarter. Also, considering that some of the state-owned banks are going through their own challenges, be it capital, second on your, the entire stress of asset quality, I think this is a key opportunity for some of the private sector banks to capitalize on, and will deliver strong earnings growth for them expected.
Okay, so Nilesh, hi, morning. So do you have a pecking order for private banks in terms of the earnings where the best earnings that you expect in this quarter? If you could give us the names.
Yeah, so I think, as I said, it will be some of the private sector banks, largely the smaller ones. So it will be a Yes Bank, Federal Bank, IndusInd Bank, which would, surprise positively on the growth and on the margins. So followed by some of the, the larger ones like an Axis and an ICICI. So what we expect for an ICICI and an Axis would be a steady quarter, driven by, steady loan growth and stable margins. But the positive element could come in for some of these smaller banks like Yes, Federal and IndusInd.
Okay. I was reading a report, and I think one of your ideas to possibly go short or maybe you're negative on in terms of delivery of numbers will be Oriental Bank of Commerce. Am I right about that?
Yeah, so as I mentioned, somehow it'll be the entire challenge, the entire state-owned bank space per se will go through their challenges as we haven't seen the economy come out of the woods completely. Plus, you have one specific, element in terms of till last quarter we saw most of these state-owned banks offload NPLs to ARCs. So this quarter, post the RBI regulations on ARC sales, we've seen that activity slow down a bit. So the headline asset quality numbers could actually surprise negatively for some of these names here.
Okay, so that exactly was my question. So you wouldn't be positive on the valuations, because we just had a brokerage that upgraded OBC today on account of just valuations, considering that it's probably one of the cheapest PSU banks at this point in time. So you wouldn't put cheap valuations as a reason to buy, as against maybe Q2 numbers which would be weak?
So Q2, so directionally, yes, we agree. We have a buy on OBC, purely valuation argument. But, this is, so compared to the private sector banks, which we expect to recover or perform far better in the early part of the cycle, PSU banks like an OBC, given their own challenges, capital, and I think the management change also, which is taking place, we expect them to perform maybe, at the later part of the cycle when we very well entrenched into the cycle. So clearly, valuation, there is obviously an upside at, some of these names are trading below book, substantially below book at about 0.6, 0.7. So clearly from a valuation side, there is merit for them to be a buy. But from a pecking order perspective, they clearly would not be a preferred one at the moment.
Okay, so Nilesh, what about Bank of Baroda in particular? That's one bank where the earnings have been quite volatile. Of course, we saw last year there was quite a bit of derating on that one. What's your call on that one?
Yeah, so Bank of Baroda this quarter specifically, I think we could see some bit of muted performance. They've always been delivering better earnings growth compared to the industry, largely coming on the back of strong loan growth and asset quality performance, which has been quite benign. Loan growth this quarter, maybe there could be some bit of slowdown which would be seen in their numbers. And asset quality, I think, is given we're seeing the last year where the dispensation of RBI's norms is on restructuring is there. We could actually see some bit of elevation on the restructured side for Bank of Baroda. So yeah, better than the peers, but could be a volatile one this quarter.
Would you be positive on Bajaj Finance and Finserv? Both of them come out with numbers tomorrow, and your sense in terms of which NBFC would possibly lead in earnings growth and maybe which one would be the most disappointing, maybe like the likes of M&M Financial, which was disappointing previous quarter?
Yeah, so I think, on the NBFC side specifically, one name which clearly could surprise positively is LIC Housing Finance, driven by, strong loan growth and, stable to improving margins. Specifically, we could see some action coming on the back of some NPL resolutions which could take place. So from an earnings perspective, you could see a positive surprise on something like an LIC Housing. Bajaj Finance, I think, given that retail is one segment which has shown positive trend over the last couple of quarters, I think Bajaj Finance should see a reflection of that in terms of strong numbers. But, that is more or less expected in terms of you haven't seen any disappointment coming from Bajaj Finance over the last couple of quarters. So, this quarter should not be any different. On NBFCs which could actually surprise negatively or could be slightly muted, I think challenges for M&M Finance have continued, at least as per our expectations. I think there should be slow growth in terms of the auto sales for them. Plus, I think the recovery challenges are still not, are still very much there for them. So, we don't expect a meaningful improvement in NPLs for them.
Okay. Fair enough, Nilesh. We leave it at that. Thank you very much for joining in and talking to us. So that's Edelweiss, which is expecting maybe private banks to lead in terms of earnings within the entire banking space, and LIC Housing Finance from the NBFC space could surprise. For the Nifty, that is positively rather. 7822 is holding. We'll take a break, but up next, we'll continue our discussion on the earnings corner. We'll shift focus to the oil and gas space.